And I'm impressed that he would outright say they have to expect lower prices as well. But how do you expect this to play out?
I think in the short term, we're in a tight oil market, and it's probably going to get tighter because of basically lack of investment, and demand has simply been stronger than many people had anticipated. And on top of that, as you said earlier, there's a whole geopolitical overlay here. And here in Washington, I can tell you the sense of nervousness about Ukraine is very, very high. But I think on the other side, on demand, there's a fact that people are kind of discounting Omicron's effect on China, thinking that it won't collide with its zero tolerance policy. And so, but, longer term, of course, it's a cyclical matter. But there is this question about preemptive underinvestment in oil that I think is weighing on the market and is part of the underlying concern.
Quick question. How much of a Ukraine premium do you think is built into the oil price right now?
Well, that's always a guesstimate. I think there are kind of a couple of dollars. But I'll tell you, here in Washington, people are working on war games, figuring out what to do. Obviously, the discussions with the Europeans about where do you replace supplies if they're disrupted. And, Europe gets 35 to 40% of its gas from Russia. So it's certainly in there in the price. And every day it seems that the tensions, the concerns, the timeliness about when something's going to happen draws closer.
Absolutely. And I wonder, Dan, the stocks are not doing as well as they were in 2014. They've been up big over the past year, but relatively speaking, the market caps were larger in 2014 for these companies than they are today. Is that because people think by the end of the decade, there's going to be a lot smaller market for oil than there is today? Well,
certainly that message is out there. Our own view is that, in fact, oil demand will continue to increase during this decade, which is what part of this problem of investment is. And of course, there are increasing numbers of investors looking at ESG, not wanting to support the sector, or thinking this is only temporary and that it's going to revert sooner rather than later. But clearly, there's more interest among investors in these companies now than there was 6 months ago.
Yeah, and if you want the whole backstory, I can recommend not only that book behind you, but the whole library of Dan Yergin for some perspective on these challenges that we face right now. We'll leave it there, Dan. Thanks for your time today. We appreciate it. Dan Yergin with IHS Markit.